Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I'm Jerry Mullen here today for our top stock picks segment. My pick is AutoNation, a Zacks #1 strong buy with the ticker symbol AN. AutoNation operates as an automotive retailer here in the United States. The company offers new and used vehicles as well as parts and services. At the end of last year, AutoNation owned and operated 315 new vehicle franchises from 230 stores, primarily in the Sun Belt region. The stock has been in a tear this year, up over 80% so far. That might seem overstretched, but after a recent earnings report, the chart is looking bullish. Okay, let's bring up the profile page and go over those most recent earnings. AutoNation reported earnings back here in late October, seeing an almost 18% beat on the bottom line. Revenues did miss slightly, but used vehicle sales were up a whopping 53% year over year. Additionally, the finance and insurance segment was up 24% year over year. The only disappointment was new vehicle sales that were down 3% versus 2019 numbers. Management commented that demand continues to outpace supply for new vehicles and that new vehicle sales are constrained by reduced production volume with low inventory levels. They expect this pent-up demand to support sales in the future. AutoNation must be feeling confident because they also announced a share buyback of $1 billion, which is 12% of their market cap. Now let's talk a little bit more about AutoNation and some fundamentals. The company is headquartered in Fort Lauderdale, Florida, and was founded in 1991. They have over 21,000 employees and a market cap of $8.5 billion, just under $8.5 billion. You can see their Zacks style scores: A in value, A in growth, and D in momentum. And they have a PE just over 7, so this is definitely a value play despite the recent run-up in the stock. Over the last 30 days, estimates are headed higher. So let's look at that. As you can see here, the estimate revisions, we have analysts all hiking over the last 60 days. And for the current quarter, we see a jump from 422 to 509 over the last 30 days. So that factors in the prior earnings. And that's a jump of about 20%. So for next quarter, we see a 35% mover. And you can see the current year and next year, we're headed higher. So let's talk about why these estimates are going higher. What it comes down to is supply and demand for vehicles. Inventory is very tight, and I'm sure you heard that prices are going higher. For this reason, AutoNation is actually benefiting. They're selling less cars year over year, but seeing higher prices. This is leaving them with a new gross profit per unit record of $5,484, up 116% year over year. Wall Street loves that kind of stuff. And with that, used car demand remains strong. Okay, let's look at the charts. So after earnings, you can see this stock popped higher, but then they gave away the gains rather quickly. Investors have become nervous that the industry is topping out, and the market saw some weakness here. However, recent channel checks have shown improvement in sales, and the overall market strength has helped too. I can't blame sellers for taking profit after this massive run higher in 2021, but we might have even higher to go. So let's zoom in. Okay, this is the earnings back in late October. We saw that move higher and the subsequent sell-off. Now, if I was on the short side, I was going to be looking for this 50-day moving average. It never happened. The 21-day, which is the green line, actually held the whole time. So the 21-day is a momentum moving average. And that held. And now we are breaking a Fibonacci retracement. That is found drawing from these highs to recent lows. And when this breaks, it can give us targets of extension of 161.8%, which is 142 and change. So I see a great risk reward setup technically. You can lean on this 21-day moving average if you want to have this tight stop, or this 50-day moving average. And 115 would be the spot I would be hesitant to remain long. But your reward essentially is about 6 or 8 points for a 14. So that's good risk reward. I like this trade setup short term, but long term, the fundamental story is strong as well. Okay, that's it for me and my top stock pick, AutoNation. Here is Shiraz with his.
Thanks, Jeremy. My pick, folks, is Citigroup. No introduction needed for the company or for the stock. If in your portfolio you have no finance or no banks, then you have a few other options as well. In fact, From my standpoint, the entire money center banking group is best positioned. So Bank of America will be my top pick. And on the turnaround stories front, Wells Fargo and Citi will be the other ones. The reason I like Citi more than Bank of America, for example, at the current stage is purely valuation. The stock is dirt cheap relative to the outlook I have for the underlying business and the turnaround plan that the new management team has outlined for the company. I think the outlook for the broader U.S. and global economy, the cyclical side of the business, and then the outlook for interest rates effectively requires that any well-constructed and diversified portfolio have a banking presence in there. And as I said, you could have any of those stocks, but Citi is better than the alternative because it's so cheap. Now, being a turnaround story, it requires some patience, which could be difficult for some of you. And as a result, the pick may not work for everyone. But for those of you that have the holding horizon beyond the next 2 years, at least 2 years, I want to say, then you will be handsomely rewarded. The stock is currently trading at a steep discount to the peer group. And for the peer group, I'm looking at the large money center banks, including Goldman and Morgan Stanley. So it's trading at 0.89 on a trailing tangible book. 2.4 times is the comparable for the peer group on a forward 12-month EPS basis as well. It's trading under 9. The group is close to 12. The group as a whole is discounted too, in my judgment. So that's why I recommend having banking. It's, as I said, turnaround. It just recently announced exiting the Korean market, South Korea, and has outlined a plan to exit a number of underperforming emerging markets that Citi has been a part of. Unlike its peers, about a third of Citi's loan portfolio is international. And it is in the process of retrenching from those markets to really plug the performance gap with its peers. I'm convinced that the plan is viable and should bear fruit. I have the stock in my own personal portfolio and strongly recommend it for those of you that have a long-term holding horizon.